Hello everyone. It's already second or third sub-quarter of quarter three. So for those who are not aware, um, one of the strategies I use for my trading system is using quarterly theory reloaded, reloaded in a different time window. To be specific, that time window is uh, the most volatile overlapping sessions of the day. That starts at 8, that are 4 p.m. and ends at 1 a.m. using GMT plus 8. So for your reference, this will be the time range of each quarter and sub-quarters. For quarter 1, it will start at 4 and ends at 6:15. For quarter 2, it starts at 6:15 and ends at 8:30. For quarter 3, it will start at 8:30 and ends at 10:45 p.m. while quarter 4 starts at 10:45 and ends at 1 a.m. Each quarter is subdivided into 4 quarters. We call this as sub-quarters, and the best time window to find a scalp entry using the sub-quarters of each quarter will always be the sub-quarter 2 to sub-quarter 3. For quarter 1, scalp trades can be the best time window to find a scalp trade using the sub-quarters will be sub-quarter 2 and sub-quarter 3. While for quarter 2, by the way, the time for the scalp trade, best time window for finding a scalp trade under quarter 1 will be sub-quarters 2 and 3 will start at 4:34 and ends at 5:42, while the scalp trade for quarter 2 will start at 6:49 and ends at 7:57. As of the moment, the time is 9:51 using GMT plus 8. The quarter 3 best time window to find an entry will start at 9:04 to 9:30 and 10:12. So therefore we are currently under sub-quarters 2 and 3 of quarter 3. So what's the purpose of finding a setup during the sub-quarters 2 and 3? So the main reason for that is the manipulation can only happen during these sub-quarters 2 and 3 because the common, or rather there are 3 basic structures for quarterly theory. It's either an AMDX, where A stands for accumulation, M stands for manipulation, D stands for distribution, and X stands for can be a continuation or a reversal. So if I put XC, that means continuation. If I put XR, that means reversal. The second basic structure will be the XAMD, meaning the X continuation or X reversal will happen first before doing an accumulation, manipulation, and distribution. And then the last structure will be the continuation model. For the continuation model, this will only happen when there's no clear manipulation that will happen as uh, during the subquarters 2 and 3. Take note that as you can see here, the M here in the first structure and the second structure can only be found on either second quarter or subquarter or third quarter or subquarter, which means the best time window to find an entry will always be during the second quarter or third quarter or second quarter or second subquarter or the third subquarter. And that's exactly the reason why we have the following table to summarize the time windows, the best time windows in finding an entry. Now, going back to the chart right now, since this will be considered as a QTRi, QTRi, by the way, stands for QTRi stands for quarterly theory reloaded. The I stands for intraday. So since this is an intraday, therefore the 4 quarters starting from 4 p.m. to 1 p.m. 1 a.m. I mean GMT plus 8 will be used for identifying the possible structure of the intraday setup. So with this, the first one can be considered, or the first quarter can be considered as an accumulation. This can be considered as an accumulation simply because there is no one of the reasons why this should be labeled as accumulation is simply because there is no clear manipulation. If the internal structure or in the internal if the subquarter structure has no clear manipulation during the second or third subquarter, then it's either that quarter will be an accumulation or an XC or an XR. In this case, we will label this as an A, and this will be considered, the second quarter will be considered as a possible manipulation. Why manipulation? Because the low of the first subquarter was already taken. And then after the low of the first subquarter was taken, the market continued to go to the above the equilibrium of the first subquarter. When I say equilibrium, I'm referring to when I say equilibrium, I am referring to the PDRA, quarter PDRA. This quarter PDRA will give us an idea of what low or high will be swept depending on the closing of each quarter. For example, in quarter 1 here, when, by the way, this PDRA, quarter PDRA is dynamic, meaning you plot it based on the quarter's current high and the quarter's current low. So If we plot it based on the quarter's current high and current low, then that means this will be dynamic. You move the PDRA, quarter PDRA, depending on the most recent high and the most recent low. And then continue moving this until the quarter closes. What's the reason behind this? The reason behind this is that it will give you an idea of what liquidity will be taken, whether it's the high of the current quarter or the low of the current quarter. So what will be the condition? The condition will be if the equilibrium of that quarter PDRA, if the price, I mean, if the price of, excuse me for a while. So if the price of the current price, I mean, of before the closing, that's the most important tip that I can give you. Before the closing of any quarter or sub-quarter, plot the dynamic quarter or sub-quarter PDRA. If the price is below, before the closing, if the price is below the equilibrium before the closing, then there is a high chance that the low of that quarter will be taken. And in this case, since the first before the closing of the first quarter, the price is below our quarter PDRA, then the low of the first quarter was swept, and then from there you will do the same for each quarter or for each sub quarter. Now, for example here, if I will apply the idea of the PDRA using the sub quarter 1, then before the closing here, you will see that the price is below the equilibrium. So if the price is below the equilibrium, there's a high probability that the low of that current sub-quarter will be taken. And based on the sub-quarter low, sub-quarter 1 low was taken, and then continue doing it for each sub-quarter and each quarter. Now, let's move on to the second sub-quarter, or the second quarter, I mean. So if we will apply the same idea, just like what I have said, move the quarter PDRA based on the most recent low or high of that quarter. And the most important part is if the price before the closing of that quarter is above, then there's a high probability that the high of that quarter will be taken. But if the price is below the equilibrium, then there's a high probability that the low of that quarter will be taken. And in this case, since the price before the closing of the quarter 2 was above the equilibrium, then the quarter 2 high was taken. This will give us an idea that if the quarter 1 is accumulation, then quarter 2 can be considered as manipulation. So if we will treat this as a manipulation, then possibly we will confirm whether the third quarter will be considered as a distribution. So allow me to move this. and allow me to delete this. So it is important that you have the the time windows for the ending of each quarter or the closing of each quarter. Why? The reason is simple. This will give you an idea what particular low or high will be taken in the next quarter. So in this case, we are currently at the third subquarter of quarter 3. And what is the time window for the subquarter 3 of quarter 3? The time window for the subquarter 3 of quarter 3 is between 9:38 to 10:12. Let me just verify that. 9:38 to 10:12. So this will be the confirmation whether whether the the third quarter will be considered a manipulation or a distribution or a manipulation. Third quarter will only be considered distribution if the quarter 3 will not create a new low, or it will not create a new subquarter low. In this case, this will be the subquarter or the QTR or the entire QTR low. So for this to become a successful, the third quarter to become a successful distribution, it should not break this low. So if you will do a top-down analysis and your directional bias is bullish, then you should be expecting a distribution that will not break the bottom of your possible manipulation. But if ever this one will break the low of your manipulation, then this AMDX structure should no longer be considered. Why? Because if the third quarter creates a new low here, then the third quarter will now be switched from a distribution into a manipulation. So therefore, if this will be broken, then the structure which is originally an AMD, the anticipated structure is AMDX, will be modified or will be changed into an XA. Then this will become the manipulation, and then the distribution here should be below. So this will be the structure if and only if the bottom of the low, of the quarter 2 low will be swept by the manipulation, either the manipulation or the fourth quarter of the manipulation, or during the fourth quarter, the subquarters of the fourth quarter. But as of now, if you will consider the idea that I have shared, especially the quarter PDRA, plotting it to the most recent low and the most recent high of that quarter, the current price action before the closing is still below or within the equilibrium of the current quarter, which is the third quarter. But remember that this AMDX, XAMD, and the quadruple X or the continuation model can also be applied as subquarter structures. Meaning, if if I were to identify the structure, the internal structure of quarter, or the subquarter structure of the quarter tree, then I will consider the first one as an XC. Then I will consider the next one, or the subquarter 2 of quarter 3, as an accumulation. I will consider this as an accumulation. And then the third quarter will be considered as manipulation. So what's unique about this manipulation is that the subquarter 3 sweeps the high and the low of the previous subquarters of quarter 3. Meaning, subquarter 2 high was taken, and not only subquarter 2 high was taken, but also the subquarter 1 low was also taken, which will confirm that the subquarter 3 of quarter 3 is really a manipulation phase. So therefore, if the market goes up or goes down, that will still be acceptable, since both the highs and the low of that current quarter, the subquarters of that current quarter, were taken, both the high and the low of that quarter. So that will be a confirmation that third quarter is really a manipulation. The ideal, of course, will be a high or a low only for a sweeping of the high or the low only. That will be the ideal manipulation. However, there are cases that both the high and the low of the current quarter will be taken, and this will give you an idea that that current subquarter is really the manipulation phase. Now, if we will try to apply the tip that I gave you a while ago, before the closing, check the price action, or draw or plot your subquarter QTRi by plotting it on the most recent low and the most recent high. And then after that, check the price action whether it is below the equilibrium of that subquarter QTRi or above the equilibrium of that subquarter QTRi. As of now, before the 10-12 or the 10-12 closing, the price is below or within the equilibrium. So this means to say this will only support my statement a while ago that since the subquarter 3 swept the high and the low of that current quarter, then there's a possibility that the distribution phase will either go up or go down. That will be acceptable because the manipulation sweeps both the high and the low of that current quarter. So since we are currently at the fourth subquarter, then therefore the possibility of an a continuation, X continuation, or a possible AMD structure as a QTR or intraday setup will be considered. And of course, you may use my QTR trading system as an independent trading system, or a standalone trading system. But of course, if you have an idea, or if you have other confluence like Elliot Wave Theory or other structure-based strategy, then there's a it will give you more confidence in your analysis. Now, since that uh, I have already a forecasted QTRi structure, which is a possible AMDXC, then I will try to find an entry or an entry model that will be within the acceptable retracement level of the following. In this case, since we have here the high and then the low, if we will try to use the Elliott wave theory, this can be considered as wave 1, 2, 1, 2, 3, 4, and 5. And with that, if this is your wave 1, this is your wave 2, this is your wave 3, and then 4 and 5, then what we are experiencing right now is just part of the correction. Let's see. Yeah, this is just part of the possible correction. So meaning, if we will check the internal waves of this one, this can be considered as wave A. If I will consider this as wave A, this as my wave B, then wave C should be around 50% retracement or golden retracement. How do we measure that? You start from here to here, and then you may use OTE, optimal trade entry, or you may use the golden zone or the wave 2 possible retracement levels or ideal retracement levels. But for those who are familiar with me, I don't just rely on the measurement, because if I will rely on the measurements of Elliott wave theory, this can be refined. By the way, if you check the internal waves of, this can be refined if you count the internal waves up to the seconds time frame. But I understand that not everyone has a paid trading view, so let's just use 1 minute time frame. Now imagine if you will make a limit or set a limit order at 50% optimal entry or wave 2 entry. That would mean losing 19 pips for a possible SL once this AMDX structure will be invalidated. And if you use the 61.8, that would be 15. If you use 78.6 as your entry, that would be 8.31. But remember, if you have a structure-based trading strategy, this is an obvious zigzag correction, meaning wave A must be composed of 5 waves and wave B must be composed of 5 waves as well. But for wave B, the wave B can be of any corrective structure. It can be a triangle, zigzag basic ABC, or a zigzag, it can be WXY, or it can be a combination, or it can also be considered, a triangle can also be considered in this particular case as wave B. So there's a lot of possibility for the corrective structure for wave B. However, what's quite obvious now is that the structure after 5 waves up can be considered as, or the corrective structure after the 5 waves up can be considered as a zigzag. Zigzag if it will not create a high here anymore, because we already have the wave A, B, or wave A, B, C, and then B will be, can be plotted here. So if it will create another high here, I will no longer consider the internal waves of this wave B as zigzag. Instead, I will apply WXY or the W zigzag. Okay, but one thing's clear, as I have said, the corrective structure in the 1 minute time frame is an obvious zigzag. So meaning this wave B to C must be composed of 5 internal waves. And we can already see the first wave here. This could be the third wave, fourth wave, and then the fifth wave. Okay, so allow me to clean this up. Okay, so that this will be the possible structure. Now, if you will apply, or if you will consider my trading system, again, my trading system, I also use the confluence of using my PBCT, or the previous body candle theory, meaning the previous candles of the day, week, or month can, I'm referring to the body, not the low and the high. The previous body of the day, week, and month or year can be used as a continuation level or reversal level. In this case, if we will base it on the 1 minute time frame Elliot wave structure, then the possible reversal would be at PDB, PDB high, or the previous day body high, which was already taken by wave A. For wave C, the possible target would be the previous day body low. So in this case, we'll adjust this, or perhaps we can also consider the 886 level. Usually this 886 level as retracement is usually, I included this because harmonics can also be applied in market structure. So although we use different patterns, harmonic patterns, since these harmonic patterns are also fib based, therefore QT, or rather therefore Elliot wave structure is related, or rather harmonics is related to Elliot wave theory, simply because they are both fib based trading strategy. Okay, so if this will be the possible Elliot wave for this one, then we may expect a possible reversal here. Please take note that this will be your invalidation for a possible AMDXC. Then we are now going to refine our entry, even though we already have the previous day body low. My other confluence would be the implied fair value gap by ICT. And if you're not used to doing it manually, you can apply, or you can use this indicator, implied fair value gap, ICT implied fair value gap by Lux Algo. Okay, So all you have to do is scan the different time frames and look for a valid implied fair value gap. In this case, in 1 minute time frame, we can see an implied fair value gap here, but this one is bullish. Why bullish? Because the middle candle implied fair value gap is a 3-candle pattern, wherein the middle candle is a large bodied candle. But in this case, uh, uh, aside from that, the surrounding candles, the left and the right candles, are with overlapping wicks. And to measure it, all you have to do is get the 50% of the overlapping wicks, the left and the right. So in this case, the lower boundary is 5027, while the upper boundary is 5028. But this particular bullish implied fair value gap is no longer valid. What's the reason why this is no longer valid? It is because the lower boundary of the bullish implied fair value gap was already body broken. Once the lower boundary of a bullish implied fair value gap is body broken, there's a high probability that that point of interest will no longer hold. So once it's body broken here, after the closing of the 1 minute candle, you have noticed that the current candle, or this candle, broke the lower boundary of the identified bullish implied fair value gap. Then on the second candle or the next candles, look for an opportunity or a short sell opportunity. And then, if as you can see here, the implied fair value gap lower boundary was retested before it went down. So although this is bullish implied fair value gap, this can also be used like an inverse FVG. If you are familiar with inverse FVG or IFVG, you look for a fair value gap if it is if that fair value gap was body broken by the next candle, then that can be considered as an implied, or rather an inverse fair value gap. However, in this case, the fair value gap that I am using is an implied fair value gap. A fair value gap with a large middle candle, large bodied middle candle, and with overlapping candles, overlapping wicks for the surrounding candles. So from here, you will check the other time frames if there are any implied fair value gaps. So in this case, invalidated. At 3 minutes time frame, there's no implied fair value gap within the QTR window. At 5 minutes time frame, there's none as well. At 10 minutes, none. 15, none as well. 30, let's just scan. 45, there was a bearish implied fair value gap, but was body broken. At 1 hour time frame, there's none. 2 hours, there's none. There was a bearish implied fair value gap, but was body broken. That means invalid. 3 hours time frame, there's none. 4 hours time frame, there's none. So let me just check if there are any implied fair value gaps in the seconds time frame. Although not everyone has the paid trading view, allow me to just scan it if there's any valid implied fair value gaps. Okay. So if you will base it on the current implied fair value, current time windows for the QTR, I can't find any implied fair value gap within our retracement level. So therefore, the we will stick with the possible previous day body low as our possible wave 5 of C entry. As I have mentioned a while ago, I'm expecting at least 5 waves down for this one, and we are currently, as forecasted, the market is doing as forecasted. So once we break the low of this wave A, then there's a possibility that the previous day body low will be taken. And this will help us confirm that the third quarter will be a possible distribution. But of course, the third quarter will be invalidated. Distribution third quarter will be invalidated once we break the low of the second quarter. The price should bounce above the manipulation low, which is at 4,992. So to confirm if there's a to confirm the possibility, or to find a confluence of the possibility of reversing at this particular price level, you may also use smart money technique or correlation divergence. When we say correlation divergence, we're referring to two pairs that are positively or negatively correlated. When I say positively correlated, I am referring to two pairs. In this example, gold and silver, wherein the gold is the primary chart and the secondary chart is the silver. So just like the regular way of finding divergence, all you have to do is check the price of gold. If the price of gold is going down, for example, and you see the pivots of that trend in the silver moves in the opposite manner, then a divergence will happen. So divergence will happen when gold goes up, then silver goes down, then the divergence may happen. Based on Elliot Wave, we all we were all we were expecting for a 5 waves down here. But to confirm, we need to use other confluence like the implied fair value gap, the PBCT, or the previous body candle theory, or the quarterly theory reloaded. And then the last confluence that I am usually I usually use is the smart money technique, or the correlation divergence. So for this to create a divergence, the gold must sweep this low. For us divergence to happen, especially a regular divergence, this low must be taken. Why? Because if we take this low, that means sweeping this pivot low of the gold, and aligned to this will be this pivot low of the silver. And if the silver's price action is moving up while the gold is moving down, then this divergence can be considered as a regular SMT divergence. So its counterpart obviously will be considered as hidden bullish SMT divergence. This one is regular hidden regular bullish divergence. Sorry, not hidden, but regular bullish SMT divergence. The condition for this SMT divergence to play out is that gold must sweep this low at 4,956, while the gold, or rather the silver, must continue to go up. Once we see that possible price action, then there's a high chance that this SMT divergence will play out. Let me just check the internal waves if the internal waves are already completed. Actually, this is already completed. It's an ending diagonal wave C. Why ending diagonal wave C? I can see 5 sets of ABCs. This one is an ABC. ABC as well for wave 2. Another ABC for wave 3. And then another ABC for wave 5. So with this, there's a high chance that the reversal will happen already, which is within the retracement levels of a possible wave 2 at 61.8% to be specific, or our previous day body high was also taken. The previous body low, by the way, previous day body low was taken during the London session. It's the low of the London session, the previous day body low. So there's a possibility that the reversal will happen, or I will not be surprised if the reversal will happen from here. So we just need to have 5 waves for this one. If this becomes 5 waves, the first 5, if the first uptrend becomes mini 5 waves or a motive wave, then the best opportunity to make an entry will be the successful wave 2. Then that successful wave 2 invalidation should be here. So the invalidation of the bullish scenario is this one, and for scalp bullish last line of defense will be here. So allow me to just label this as bullish scalp first line of defense. Let me change this into 14. This will be the first line of defense, and this will be the last line of defense. Bullish scalp last line of defense. Bullish scalp last line of defense. Now that I have given you the possible structure, both the QTR and Elliot Wave Theory, let us now wait for the closing of the quarter 3, which will end at 10:45. It's already 10:38, so we still have 7 minutes before the closing of the third quarter. So if this one creates a successful wave 2 without breaking this low, then we may see another 5 waves up for a possible at least ABC up, or it becomes impulsive or impulsive motive wave if ever the wave 3 here becomes an impulsive movement. As of now, let's just do it conservatively. So the conservative target will be the high of the current quarter. So if you will consider this finding an entry here using OTE or wave 2 retracement, then this could be your conservative target for a possible wave 3 target. But it can go beyond if ever this wave 3 becomes impulsive. But for now, this will be the conservative target for an for an AMDX structure. Allow me to delete the subquarter structure since it's already confirmed that the subquarter structure is XAMD. So let's label this as distribution. Now the XC, for this to be confirmed, for us to confirm that quarter 3 is a distribution, it should not create any more low after the third quarter. So if it creates a new low here before the quarter 3 closing, then it's still okay. But it will not be okay if ever after the quarter 3 it creates another low. Then there's a possibility that the structure will no longer be an AMDXC. Instead, I will change it from AMDXC into XAMD. Thank you for sharing the live, and don't forget to like. That's the only way that the algorithm of TikTok will recommend me for live analysis, or for those who are looking for live trade analysis like this. Nakatipi na sa short. Imagine I'm explaining it to you in the actual chart, live chart, and you are just considering, if you will consider my analysis, then you may have taken a short position here already. So at least here, the ideal model for the subquarter will be this one. Sorry, not this one, but this one. So this will be your best opportunity to find or to enter a short position, the sweep of the subquarter 2 high of quarter 3. And then after that, your target will be at least the low of quarter 1 or quarter 3. And based on your forecasted structure, the probability of sweeping the low of the subquarter, or rather the quarter 2, is low. So therefore, be a conservative trader. Even if you will just take profit from this wave A price here, that would give you a good risk reward ratio. So imagine if you have considered my analysis while I'm explaining it live, then your position will look like this one. So your position will look like this. This initially, based on my data, you can use 10 or 20 pips depending on the risk reward ratio that will be given to you. In this case, if this is 26, I'll just put 36, and that will be my initial SL. I'll just move the SL once the third quarter is already completed. For example, the third quarter of quarter 3 ends at 10/12. Once the third quarter here ends, then you may move your SL a little above the high of that manipulation. And in this case, you will be getting at least a 4RR trade if you have considered my analysis. And as I have mentioned a while ago, the probability of the wave C already being completed or already completed is high, because as you can see here, it created another high, a new high. And since the quarter 3 is about to close, let's do the tip that I shared to you. Plot the quarter PDRA to the most recent high and to the most recent low. Dynamic, this is a dynamic PDRA. If the price before the closing is below, then below the equilibrium, there's a possibility that it will sweep the low of the previous quarter. But if the price is within, that's neutral, meaning it can go up or it can go down. But if the price is obviously around 75% or 25 or around 75% of your PDRA close to the premium, then there's a high probability that the expected structure will play out. So if you have considered this, then you may have used the previous day body low, rather high or low, as your entry for a possible target, which is the previous day high. Okay, the third quarter is already completed. I have given you the structure. My apologies if I will close the stream. I need to do something first before finding another entry here. So I hope you have learned from this live. I hope you are not just watching for a possible signal, because based on all my live analysis here in TikTok, if others can confirm, most of my setups really played out based on the forecasted Elliot wave counts and QTR structure. So that will be all for now. Allow me to close this stream. Again, if you haven't followed, please follow. Always share and like my live stream. That's the only way for other people to see someone who has an in-depth understanding of the market. Thank you and good luck on your trades.